What you been up to?
50% on site, 50% from home. I work in medical device, I'm quality engineer.
There we go. I think we're having some issues again with with Facebook as usual. So hopefully we're live now. We're live now on Dallas Trading Floor. Thank you very much for taking a look. It is a Thursday, the 6th of Thursday the 6th of June of Thursday the 6th of January. Let's get into the slides. Thanks for holding on here, and hopefully we can get this thing off to a good start here. So basically what's happening today is the Nasdaq kind of took a dump, and the Dow took a dump too. So we've moved essentially from a uptrend, confirmed uptrend, to an uptrend under pressure. So that's something that we got to be really concerned about. We were coming out of our shell. We were moving back into, we're moving back into the market. But now we kind of have, with the events that happened with the Fed and the potential interest rates rising, we're having some issues. Interestingly enough, the financials and some of the oil stocks are doing well today. The Nasdaq stocks, the tech stocks, not so much. But hey, the uptrend is under pressure. Now, what does this mean? Well, when it is an uptrend under pressure, we don't want to be any more invested than about 50%. We want to be 50% in cash, and we want to be in other issues about 50%. What we don't want to be is 100% invested, and we want to have our toe in the water. So it's a very tough market to trade. It's kind of a sideways market, and sideways markets are tough to trade. Now, because of this, I have a special Tesla trade, which fortunately is gonna do some hopefully do some good when it comes to when it comes to a market like this. It's volatile, but yet it goes sideways. Tough market to trade. If you're looking on TikTok, thanks for being in the live spotlight. And here's the thing: if you want to see all the charts and everything, they're available right here at this address, bit.ly/DTF 455A. 455A. I had a 455, so I had to make a 455A. So that's where you go, and you're going to see all the charts doing that. Or you can just go to my profile, click on the link. It says Beacons, and there you go. And you scroll all the way down to the page. There's a live feed of the show right now. So that just kind of want to show you that. Basically, what we got here is, let's move over to it's the Iron Condor. Let's see if I can. Yeah, okay, so there we go. Okay. And by the way, and I'll talk about this in just a second, we have an Iron Condor on Tesla, and you can get a look at that address of that. You can look at the deck, super easy. Go to this address, https://bit.ly/DTF0029. So that is, and I'll talk about that in just a second, but let's go into the stocks that I'm currently in. I got pushed out of ALGM, unfortunately, today. I got stopped out of that, but I'm in Invitation Homes. I'm in LNG. LNG is Cheniere. It is a resource play. I'm also in Dell. That was up today, just slightly, 6 cents, not a lot. Tesla has been down. It's been, I've moved my stop loss down. Currently, my stop loss on Tesla from the long positions that I have is 980. So if you're in Tesla, you might want to adjust your stop loss. I think it's going to get a little bit more volatile. It kind of pulled down and it's pulled up. We'll see what happens tomorrow, but I definitely think that there's some support right at about 1,000. So that's a good one as well. I'm also in Oasis, and that's an E&P company. They're an oil driller, and they're doing pretty well today. A lot of inflation fears, of course, and that's the reason they're up. Let's see. On the option plays, if you've been following us, we do have a bull put spread, a bear put spread on Viva Systems. And Viva Systems, as you know, it's been coming a little bit lower. Then that, of course, helps us. If Viva goes lower, our spread trade goes higher. Currently, it closed at 241 today. It has 248 on here, but I kind of want to just show you this chart. This is the MarketSmith chart. But what happened is we came down on the price, and then boom, we jumped up just slightly, and we kind of settled right here at that 241 level. So if we were looking at the trade, it says 248 here. I did that earlier in the day. Actually, in this case, our situation is going to be is going to be a little bit better, because as the price drops, so does the value. So the value of the trade goes up. So we're actually a little bit even more in the green. Let's see if I can switch to one of the charts that let's see if I can push it over to one of the live charts so we can see that. So let me just jump on over there to the Viva trade. If you've been in that one, it's a pretty good one. And Viva Systems is, was a top performer. Basically, it was a top performer this last few years, but it's kind of come on hard times. So what's happening here, of course, is that we're seeing it move a little bit, a little bit down. So what I'm going to do is I'm going to show you kind of approximately where this should be on the trade. So let's see if we can jump on over to the actual live chart on that. Let me just kind of jump on over here. There we go. So basically, this is kind of where it should be right now, with the price of Viva going down to 241. You see, we started at 250. As the stock price drops, you can see we're moving into that green zone very nicely. The great thing about this trade is when we started on this trade, basically we entered the trade at $1,080 out of pocket. We potentially could have a return as high as 920 on this one. So really a really nice trade. By the way, if you're interested in these kind of trades, we have a great opportunity if you go to the Discord room. This is a paid service, but we have a lot of very, very good traders in there. It's a nice chat room. We talk about some of these spread trades where you can make money if the stock goes down or if it goes sideways. And this is one of the ones we are currently in now. It's Viva Systems. We're looking for it to move down, and because it's moving down, you can see this is the chart. The value of that trade will go up. So that's a kind of a really cool trade. We're doing very well in that one. So hopefully some of you are in that one, and it is turning out to be a pretty good trade. Now we also have another trade on Metaverse. This is Meta. Now this is not a bull. This is not a bearish trade. This is a bull trade, and basically we are hoping, of course, that Facebook goes up. So let's take a look at how Facebook is faring today. It's actually moving up. So that's looking good too. So whereas Viva, we were making money on Viva, we're also going down with Meta or Facebook. As that goes up, we are starting to see it go into the green zone here. And of course, that's where we're shooting for. We're shooting for that green zone, and hopefully that's where we'll make some money. So as Facebook bounces off that 200-day line and moves up, hopefully we're going to be moving with this spread trade up into the green zone. And of course, I'll keep you apprised of all of this. So this is a kind of a fun thing, a fun thing to do out there with these trades. The great thing about these trades are you can get an advantage. Even if the stock is going down, you can make money. If the stock is going up, you can make money, and you can make money if the stock is going sideways. Just want to show you this also. Also here, basically we have the free stock watch list. If you want to take a look at that, super easy to do. Just go to www.bit.ly/DTF0025. It's our offer 0025. And this is a really nice, this is our watch list for January. It's a great one. This is going to go out to all of the people on the action trade alerts tonight. But this is our watch list. Very nice, research tool that helps you show where the stock actions are going to be. So just want to kind of show you that. So without further ado, this is www Dallas Trading Floor. We're going to get into some of the questions. Thanks everybody for holding on here, and I hope that everyone is doing great today. We're getting hopefully a little bit of return. Hi, I had a 20% gain on Apple, but sell it now. It's down 24%. Hold, buy, or sell. Thank you. Well, that's the thing. This is why I always recommend everybody, if you have a stock that's moving up, like Apple, you need to move your stop loss up with it. Now, it's true. You're going to get stopped out every now and again, but the advantage of that, of course, is that you are going to, when it moves up, you're going to make money. So basically what's happened is you came in probably here right at about, let's see, you probably were a buyer, I suspect, right in the very beginning of December. So you fit in about a month. It went up, it went down, and now it looks like it's going down. Now, I do think we are going to get a bounce off the 21-day line. Now, we did pull below that a little bit today, but I do think we're going to get some strength there. But to be careful, what I would do is I would consider reducing my position by 1/2. So what I would do if I was in this position myself is that I would look to reduce. I would look to reduce my position by 1/2. So with Apple, I would reduce position by 1/2. So that way you're taking a little bit off the table, but you're still getting in there. You're still in there. But I think that you need to reduce your position by 1/2. So I think that's going to help with your situation here. You don't want to round trip those profits if you can possibly avoid it. It's so painful, but that's what I would do. Reduce my position by 1/2, and then so that way I wouldn't be all in, but I would be doing pretty good. Thank you very, very much. Let's take a look at some of the TikTok people. Hey, stocks are cool. I agree with that. Don't ask. Okay. All right. More likes can attract more views. That's true. Please like me. Thoughts on Tesla? Okay. Well, let's take a look at the Tesla trade that we definitely do have here. This is the Iron Condor that I initiated today. So let's kind of look to see kind of how it's doing. And I'm just going to go through the slides here. Well, basically what I did when I got into this trade today was it's a relatively complicated trade in that it has what they call 4 legs. Basically what I did is bought the 21 January 1000 put, simultaneously sold the 125 January 28 put, and then I purchased a 1325 call for the same expiration date, that being January 21st, and then I bought the 1350 call. So basically the result of that is that put $962 in my pocket right away. And now I want to see if I can hold it until it closes and it expires. I'll keep all of that money. Now, if I have to close it early, I'll probably have to give up a little bit of that money. Now, if this trade holds above 10.15, that being the price of Tesla, or it's lower than 1334.60 by the expiration, I'll keep all the money. So here's kind of a graphically what's going on here with this trade. When I got in it today, the price of Tesla stock was 1,067, it's 1,064. So it's essentially stayed pretty much the same thing. Now, if the stock moves up or flattens out and goes sideways, you see, then I'll come right into this profit zone. So that might be of interest to you. And basically, it's available out there. All you have to do is go to www.Dallas Trading Floor. And basically, we have a little button on there. You can punch that and get all of the trade information from that. But you got to go to www.Dallas Trading Floor, and it's the first button after the sign up for the Action Trade Alert. So that's kind of a cool little thing that we have going on there. So thank you for that. Let's take a look at, okay, Mr. Jeet, thank you very much. EXTR, let's take a look at it. EXTR, and see what's going on there. That's Extreme Networks, and we kind of had a little bit of a topping action here. So the question is it a good time to buy it? Is it a good time to sell? What is it a good time to do? Well, what happened is we had this buy point at 12.29. This is on a cup basis. Then it came nicely above that, and then it followed right up that 10-day line. Now, it's pulled below that 10-day line, but it looks like it's getting support right at the 21-day exponential. And that that is a good place possibly to, this is a secondary buy point. And if it reverses off there, what it looks like it's doing, then we might have something that looks pretty good. So let's take a look at the technicals on this. The moving average, we are well above the 200-day moving average. We are 35% above that. We are above the 50-day line at about 14% above that. The 21-day, we're 2% above that, and we're a little bit below the 10-day line. So we definitely could buy that off of the 21-day line. Typically, if we're buying that, we want to buy within 5% of that 21-day line. We're definitely there at 2.52%. So that's looking pretty decent. All right, so let's look at the checklist. This is not a bad stock, by the way. I'm not in this one currently, but it's looking pretty decent. Let's take a look at some of the fundamentals on this one, because we took a look at the technicals. Now let's look at some of the fundamentals. Now, in a fundamentally in a stock, you want to see a stock move in such a way that you have basically 20% growth in sales every quarter. This is for growth stocks. Well, we definitely had that. 3 quarters ago, so that's looking good. We definitely had that 2 quarters ago. That's looking good. Now the growth is slowing a little bit, 14% last quarter. So the question is, when are earnings coming up? Well, they're coming up on February 9th for Extreme, and the question is, will they meet it? So they have. So not only has the sales gone up very nicely, but so has the profit. So this is looking like a pretty good profitability stock. Now, but I want to warn you, right now in this market, many of the growth stocks that have high PE ratios are getting punished. That's not normally the case, but this has a PE ratio of 21, which isn't necessarily that bad for this kind of stock. We do have a tremendous return on equity, 24%, but you've got to be careful in this market in that the capital is looking to more lower PE stocks. So I want to kind of put that out there. But basically, from what I can see, from what I can see on this is a potentially good one to buy. I might indicate though that we might want to take a look at some of the legacy tech stocks that have low PEs, because in this environment they seem to be doing well. One of the ones I'd like to show you, of course, is HPQ, and this is the cold compact. And this one, believe it or not, and I haven't touched this one in ages, but this is coming off a very nice base, and it's a potential buy. And it has a very low PE ratio, and I do think that they will survive well in this environment. Now, the only thing is the buy point is 32.28, so we're a little bit extended at 38.65. This is not a terrifically fast-moving stock. I'll be upfront with you on that, but I do think we are going to see stocks like this, at least in the near future, favored. Now, this doesn't have the 20% quarter-over-quarter growth that I like, but the profitability is strong. So this might be an alternative to Extreme Networks and lower your risk a little bit, especially if you want to stay in the tech. The cash flow on this is excellent, $4.81 per share, basically a PE ratio of 10, which is great. Now, one stock that I did go into yesterday was Dell. And, Dell is about as boring as, it's watching paint dry, but I saw some of these fundamental things that I really liked. I liked the chart action. I want to show you that here. The chart action was good. We came down and we tested. We're moving up. There's a buy point at 58.13. We're right at 58.70, and that's an old buy point. So this is definitely actionable here. Dell is definitely actionable right now. It does have a very nice week. It does on the weekly chart. You can see on the fundamentals, it has some good profit sales growth. Now, it's not as high as I'd like it. It was 21% last quarter. I'd like to see 20% or better this quarter, but I'll take it. And if you look at the checklist here, it has a 78% checklist, which is quite good. The only thing it's failing on is earnings per share percentage gain and earnings per share and earnings per share rating. The RS rating, though, is very good. In this environment, we want to be very careful. We want to be highly selective, much more selective than we normally are. We want to look for stocks with high relative strength against the rest of the market. This one has 89, so we want to look at about 85 or better on this. We also want to look at stocks that have low PE ratios and where they have improving sales. And so those are the kind of things we need to kind of look at. So thank you very much for that. For Samuel, let's look at XLF. This is the Spider Select for financial. This is, of course, an ETF, and very good way to play the financials. The reason this is a good play is because you don't have to pick any one particular stock. So this is XLF, and right now there is a $40.86 buy point on this one. We're right below that. We're literally right below that. We're about 10 cents below that. This is getting ready to buy. This is getting ready to pivot, and this is a good stock right now to possibly take a look at. Now, this is not a stock. This is a stock of stocks. It's an ETF, exchange traded fund. Because of the pronouncements by the Fed, we're looking at strength possibly in two areas. One is the oils, and the other one, of course, is the financial sector. This is a great way to play the financial sector because we don't have to choose any one of the individual stocks. We can just choose the index for the whole area. So I really like this. I like this play, Samuel. I think it's excellent. And I think this is the kind of thing that you might want to be looking in this kind of environment where it's a little bit more difficult to invest. It's a little bit more volatile. This is a way it's going to dampen down some of the volatility, but yet still give you exposure to this financial sector, which is likely to do extremely well, at least in the next few months. We don't know how it's going to be long term, but financial sector right now, stocks are doing well. I also want to kind of point out here the sectors that are doing the best. We always try to look to see in the market where the money is going, and then we try to go there too. We kind of try to follow along like little fish after the big whales. We want to see where the whales are going. We want to look to see what they're eating, and then we want to go there too. We want to look to see kind of the best stuff there. So the way I do this is by looking at the list of the best areas in the market. Now, currently, the best area in the market is semiconductor fabless, and I did have some exposure to this, but this has been kind of volatile. There's not really that many good setups. AMD pulled back, and also NVIDIA pulled back. So we definitely, even though this is the number one sector right now, very tough area right now to find something good. Now, I'm in the automobile manufacturers, and of course, that's Tesla mainly for me. The thing about Tesla, of course, it's extremely volatile. But let's look at the kind of the setups here. We had this sort of big dump here below the 50-day line just today. So hopefully we'll get some support here and we'll move back up. But this is very strong sector. This is the number one sector in the market. No, I'm sorry, number 4 sector in the market, automobile manufacturer. And I want to kind of show you which ones are the top ones. Well, interestingly enough, Toyota, Ford, and Stellantis. So those are 3. But I really think that the outside stock, the one that's really pushing this, of course, is Tesla, and it has a larger, as the market cap of Tesla is approximately 3 times the size of Toyota Motors, which used to be the largest automobile company in the world. So that's one place we can look potentially for, potentially for things to look at. But I also want to put your attention to the E&P area. This is where I found a lot of very good stocks. This is going to be a little bit easier, I believe. This is not the number 1 area of the market, but it is doing quite well. It's basically the number 7 rank group in the market, 98 relative strength on the whole group. So we're looking very, very good here. The top stocks, of course, in the top stocks currently in the E&P area, we have some of these Canadian stocks which are excellent. So this is an area that you might want to kind of start taking a look at. Now I have OAS, and that's not actually in this Canadian E&P area, but in the Canadian E&P area, I think we have one that's really a standout, and that is Crescent Point Petroleum. And I'm going to show you the chart of Crescent Point. Now it's just above the buy point, but I do think this one's kind of a sleeper. You've probably never heard of this one, Crescent Point, but I want to show you this is a good stock. It's a very inexpensive stock, closing at $6.03. Now this is up in Alberta in the oil sands. This is one that you might want to take a look at. It's got an excellent checklist, an 89% checklist. The only reason that this is not 100% is because the stock is below $10, and typically with stocks below $10, they tend to be shunned more by some of the bigger funds. So it does have funds in there, but not quite as many as it might have if it was over $10. But there's still 200 funds that are in this company. It's called Crescent Point Energy, and I kind of wanted to give you an idea of what kind of funds that we have in there. Many of these funds are not A-rated; they're the smaller cap funds, but definitely still quite a few funds. And the reason, of course, for this, the reason these are not ranked as high as some of the other funds is because the stock is below $10, and many of these funds have restrictions on buying shares in companies that are under $10. The symbol on this one is CP is CPG. Let me just put that up on there on the screen. So this is one you might want to possibly take a look at. I'm not saying it's a buy, but CPG, Crescent Point Energy. And this is in a Canadian firm. They're up in the shale, in the Alberta shale, and it's definitely top rated, looking very good on for the Canadians. So this is one you might want to kind of take a look at. Crescent Point Energy, CPG, is the symbol there. So that's kind of a little bit of a digression here, but right now with the strength in some of the E&P companies, both in the U.S. and Canada, those are places to look for, for values. Absolutely for values. Okay, let's look on Intel, INTC. Boy, I haven't traded Intel in a while. INTC, of course, this used to be, I think, was the largest cap a semiconductor company, but that has been essentially eclipsed by NVIDIA. I believe NVIDIA is now the number 1 chip company in the world. I would not buy this, and I tell you why. There's several reasons. Intel right now, unfortunately, is not a good buy. One of the major reasons is it's below that 200-day moving average. You never want to buy a stock if it's below that 200-day moving average. The reason is because capital is flowing out of it. Even as good a company as Intel has been over the years, I think you got to be careful here. This is not right now. The market is not favoring this stock. It's got a relative strength of 36. This is far too low of a relative strength to consider buying it. The checklist, other than that, is pretty decent, but I'm worried about the relative strength and the fact that it's trading below its 200-day moving average, and that does not make for a good buy. So here's what I have to here's kind of what I would have to say about Intel, and that is with Intel, with INTC. is not a buy now. Avoid. Not a buy. And it really isn't a buy for those reasons. I mean, it may, we may see some strength in the future, but right now, it's not a buy. It's right now it's not a buy. Intel is not a buy. So I wouldn't buy this one just based on these chart actions. Just isn't strong enough. Excuse me. To buy at this time. So I think you got to avoid Intel right now. All right, let's look at, thank you very much let's look at Upstart and CRM. Let's take CRM first. CRM, of course, is Salesforce. Many of these SaaS companies like Salesforce have been being hurt very, very badly. There's a disinvestment right now out of software names. So you got to be careful in this area. This area of the market, computer software enterprise, has fallen significantly. This was a top performer, and now not so much. So I kind of want to go and take a look, first of all, not just at CRM, but the whole computer software enterprise area as it stands right now. And that is sort of an issue. Let's go to, and I didn't, let's go to the list. Sorry about that. I got, I've been, let's see if I can go to the correct list. Okay, let's go to the correct list. We're going to go back to the listing for, well, I didn't get it right. It doesn't, for some reason, it's not, hopefully. Okay, there we go. So maybe now I can get that list up correctly. What I'm doing again is I'm looking for the industry groups here. And right now, software is unfortunately not well rated. The software enterprise area is not a good place in the market right now. It's just one of those things. So let's see if we can get computer software enterprise. Let's see. Okay, goodness. Let's see if I can. Computer software enterprise. That's the one we're looking for right now. And it is moved, this group has moved down as a group, it's moved down. So we don't really want to be in this group right now. And of course, that's the reason, part of the reason that CRM, Salesforce, is having a problem, of course, is because this group is very weak. It's being disinvested. As you can see, some of the top stocks are down almost 8% below their all-time high. So this is not an area of the market that we want to be in. CRM is number one in this area, and yet it is not doing well relative to other stocks. So I think you got to avoid, with CRM, Salesforce. I think you need to avoid it for now. It's just not at a point that it's where you want to be now. Last year it was doing very well, but currently there's a lot of disinvestment out of this issue. So here's the thing about CRM, Salesforce. It is in a downward trend. We don't want to ever buy in a downward trend, of course. It's below that 200-day line, and look at it's fallen off the bandwagon. This one may move lower. There's a potential here because this looks like a top here, and this looks like a shoulder. So if we form another right shoulder here, this may be shortable. But you want to kind of avoid this one for right now. The sector of the market it's in right now, it just is not good. So I would avoid I would avoid CRM for now, just because it's in a weak it's weak itself, and it's in a weak group. Believe it or not, software enterprise, unless it picks up, it's probably not the place to be. So I would avoid software Salesforce. Now let's take a look at Upstart. Of course, this is also in the software area, another area that's been pummeled. And let's take a look at Upstart. I don't think this one's any better. Matter of fact, it's worse. And kind of want to show you that we are below that critical 200-day line, so it's really not buyable. We definitely we had a really nice run up to $401, and then basically that was in the first week of October. Unfortunately, it's been down from there. So this one, if you're down, the critical thing on this one on Upstart is, if you're down more than 7%, you really need to consider. You really need to consider going out of it. You never let a stock move against you more than about 7% from the buy price, because here's what happens. As you can see, it just it continues on downward. So right now, if you're down more than 7% on Upstart, consider selling it right now, because it's probably going to go lower. So there you go. Samuel's asking about RF buy point. Let's look at that. RF, of course, is a Regions Financial, and this is one of the super regional banks. And this has got a very nice formation. Remember, today, in this interest rate environment, with interest rates potentially moving up, the financials are going to do well, and so are some of the more inflation-oriented commodity stocks, such as the oils. That's where we want to look for deals. But this has a base on base formation. It's a cup on a cup. And the current buy point on this one, 24.89. So the buy point for the buy point for Regions Financial RF buy point is basically 24.89. There we go. Yeah, 24.89 is where that buy point is. And what do I mean by buy point? Well, a buy point, or it's sometimes known as a pivot, is a place where if it moves above that level, that's where you want to consider buying it. Now, interestingly enough, everybody says buy low and sell high. Well, that may be a good idea if you are selling or buying dog food or something like that. But in the stock market, remember, you're always wanting to buy to resell. So you want to buy as a stock is moving up. You want to buy high and sell higher. Now, with the Regions Financial, that may be possible because we have this base on base formation. We are currently almost right at the pivot. Let's take a look at the technicals to see. Let's take a look. Well, the technicals say that we are basically very, very close to the pivot. And let's go to the pattern recognition. There we go. The pivot is 24.89. So we are basically 1% below the pivot. If we can punch through that, there's a high likelihood this will go higher. This has a very strong relative strength of 90. In this market, we want to be buying the high relative strength stocks. That's currently the case here. This has a 78 checklist, which is very, very good. So this one, green light for this one. This is one you definitely can buy. The buy point on it is 24.89. That's your buy point on Regions Financial. So not a bad stock, and in a good area, at least for right now, with the market being so volatile, so volatile. All right, let's take a look at Brian. Can you tell, what do you think of DocuSign, DOCN? That's DocuSign. This was a tremendous high flyer. I did own this one, but unfortunately, it came out of favor, and then it's just been tough ever since. Look at this chart. Look at that. It just kind of did a swan dive, and this happens. This is why you got to have your stop losses in, because you're going to have situations like that where you just everything looks like it's going right, boom, and then it gets a bad earnings report. That's what happened here, and then whammo, it just moves down 100 points. It went basically from 250 to 150, basically one fell swoop. Tough stock. Now, here's what happened. Here's why I believe did that. It came on down. It was coming down. It was not able to get above that reversal line. It basically hit that 200-day moving average. It could not hold it. And when it became apparent that it could not hold it, everybody sold when we went down to 150. So this is why it's very dangerous to buy anything below the 200-day line. As you can see, they have a propensity to do this kind of swan dive if they're below that 200-day line. So one of the ways you can avoid that, of course, is not to buy anything that is below that 200-day line. Currently, DocuSign is 41% below that 200-day moving average. Not a good look. Not a good look. So that means currently that capital is moving out of this issue into other areas in the market with better returns. And I don't quite know everything or why this is the case, but right now DocuSign is being disinvested by many of the funds. So we got to be super careful. By the way, just for fun, let's look at some of the funds that are in it. We do have some great funds in there. I mean, Fidelity Contra Fund is an excellent fund. American Century is an excellent fund. But you know what? What happens when sometimes when stocks like this get out of favor, when nobody's looking, these funds try to unload their shares. So that's sometimes why after earnings, this could be dangerous. This is one of the reasons I recommend, if you are buying a stock, to consider selling the stock if you're coming into earnings and you're not up at least 10% on that issue, because that way you can protect some of the profit. So it's a tough one. DocuSign, I don't think it's investable. It's just the way it is, unfortunately. It's just the way it is. Let's look at CHPT and see if there's anything there. And let's look. This is ChargePoint. Now, of course, as we know, the other one here is Blink. In the Build Back Better program, which didn't pass, I don't know if it's going to, there was all this money in there for charging stations. Of course, the problem is the only company that really is well fetted for charging stations, of course, is Tesla. Now, interestingly enough, Tesla is allowing other EVs to charge at their stations, which is really interesting because now they can grab the data from everybody else and advertise to them. And I think they will rue the day that if they were buying an electric car that they didn't buy the Tesla. Tesla is looking to get approximately 75% of the U.S. EV market. So that's coming. So ChargePoint may not be, unfortunately, as potent a stock as we would have thought. It looks as if Tesla is leading in the charging station market as well as with the cars. So this may not be as good as I definitely thought it was about a year ago. I did buy Blink Charging, which is a smaller company than this, but unfortunately these EV charging station stocks have not been doing well, and they just have not been doing well. And it's just the way of the world. Let's look at the fundamentals. The fundamentals on this basically are that we do have nice growth in terms of the sales, up 79%. So that's looking good. The problem, of course, with ChargePoint is they're still losing money on each one. So if their market share does not grow, they will be in a situation where it's going to be much more difficult for them. It's going to be much more difficult for a company like ChargePoint. So I would not be a buyer of ChargePoint at this point. It's just one of those things. It's just one of those things. Let's look at KBE. KBE. All right. And that is the S&P 500 Bank ETF. This is you're definitely looking in the right area. You're definitely looking in the right area, Samuel, on this one. This is going to be doing quite well, I think, because right now the market is favoring financials and some of the energy stocks. That's sort of where it's been favoring it. Now, unfortunately, it's kind of right up by this thing here, but the buy point on the flat base on KBE, of course, this is an ETF, not a stock, is 58.31. So we're very close to that. We're at 58.85, where we're just above that pivot. You definitely could buy it at this point. This would not be a bad idea. The relative strength on this 84, very strong for a ETF. Typically, ETFs have lower relative strength because they're indexes. This is looking very good. So I think, Samuel, I definitely think you could greenlight this one. This would be a good purchase, at least in the current environment. I think that these bank ETFs should do well. Now, these aren't rocket ships. These aren't anything like some of the tech issues, but I don't think you're going to lose money here. Lots of money is coming into this issue. That's what this little Easter egg is. That means that we've have some of the highest volume since the last buy point. So right now with this one looking pretty decent. The buy point on KBE, of course, this is the regional bank ETF. The buy point on this 58.31. Currently the price 58.85. It's right above the buy point. It's in the buy zone, and this one is definitely buyable. So very, very good choice there, Samuel. Thank you for that. That's a really good, that's a really good suggestion for a stock. Let's look at AEG and see what's going on there. AEG, and this is Argon. This is not. I'm not familiar with this one. This obviously is an insurance company, and insurance companies typically, when the market is volatile, these guys do well. Why? Because insurance is one of the greatest cash flow machines ever. People pay you, and then you have to pay out, but you don't have to pay out until they've paid you for a long time. So unlike most companies that expend capital, that require more capital, insurance companies actually generate cash flow. So definitely like this area of the market. This is a Dutch company, and of course there's a lot of very good Dutch companies in the insurance industry. The sales are nicely up on this one. This is not going to be too exciting of an area, but it's looking pretty darn good. There is a buy point on this stock. It is a cup based. It's a very inexpensive stock. Remember, this is a life insurance company that's trading on the Amsterdam exchange with depository receipts in New York. Very inexpensive, $5.29 a share. Don't know a whole lot about it, but I do know life insurance, especially in down markets, especially in inflationary markets, tend to be extremely good business. So this one, you probably, if you're interested in having exposure to the insurance area, and that's definitely a good area. I like them better than banks, by the way. Looking pretty good. We are up. The moving averages were up. We were up above the 40-week line, the 10-week line, and the 3-week line. So it's looking all very, very good. Very, the only thing is, it could be a little bit stronger in terms of the price, but that's the only knock that I have on it. Obviously, below $10, a stock is not nearly as investable as it is over. So, but that's the only thing that's the only real thing I see about that. So pretty good deal. Pretty good deal there, definitely. Okay, question about from Nima. Is it a good time to buy Apple? Well, Apple's one of those kind of stocks. It's a $1 trillion stock, worth $3 trillion. It is the most valuable stock currently in the market is Apple. So the question is it a good time to buy it? Well, if you think the market in general is going to go up, then it's a good time to buy Apple because it's such a large component of all the stocks. Now that said, I think we got to look at the daily chart to see if there's a good entry point. And looks like what's happened is, it's been moving up, but right now, unfortunately, and I think you can see that. I don't know if you can see that little blue zone there. That's the buy zone. It's extended. So right now, I think you have to wait, and this is painful because I think to buy I think to buy Apple right now, the best course of action right now, and you're not going to like me say this, is to wait for Apple to form a base pattern before buying. And really the thing is, this is more tactical here. But if we buy now, Apple is extended. It's above the proper buy point on the last base, which was a cup with handle, which was at $153.16. We're currently at $172.28. So we're very far extended above that proper buy point. So right now is not a good place to buy Apple. This is not a good entry point. Let it form another base, either a cup with handle, double bottom, whatever. But it needs to form a base. Not time to buy yet, not strategically a time to buy, but you definitely want to watch this one, of course, because it's one of the great all-time winners of all time. But I would not be buying it now. What's up with NEO? I think a lot of people have gotten trapped in NEO. This is the reason why if a stock goes down more than 7%, you need to have a stop loss in there to protect yourself, because the problem is, and here's how it goes usually, you think, wow, it's down. Well, it's down only 7%. I'll just keep it. It's down 10%. Well, I'll just keep it. Pretty soon it's down 50%. If a stock moves down 50% on you, then it takes a gain of 100% to get back to even. So it's always better if a stock is moved below, if a stock is moved below on you more than 7%, it's always the prudent thing to do is to sell it. And so the way that I do is I don't even make a big deal of that. I put the stop loss in. If it's tripped, I just say, well, that's too bad, unfortunately. But right now, NEO just not looking good. It's below that, even though it's in the automobile sector, it's just not looking good. It's below that it's below the let's get it right. It's below the 50-day moving average, so we don't like that. The 40-day line is below the 200-day line. That's not looking good. It's trading below the 21-day line. So all in all, this is potentially a shorting stock. Now, at $29, I'm probably not going to short this one. And the reason I'm not is because there's not a lot of meat left on the bone. Its high was over here at 66. I'm really looking for something that's been up a lot further and has a lot further to fall so I can make more money. Let's look at Peloton. This might be one that's in that area. I think it did pop up today, Peloton Interactive. And I do think that this one is setting up as a very nice short as well. I will probably have this one out as a short once again. I do think this is going to continue moving lower. I do not see a lot of support for this one. The only thing about Peloton that I don't like for shorting is the fact that we don't have as much meat on the bone as I'd like to see. So when you're looking for a stock to short, you want a stock that has been popular several months prior, typically, which makes it inflated, and then you want to find it in the right pattern. Those are the kind of stocks you want. You don't necessarily want the laggards because they can just laggard for years and years and years. When you're shorting a stock, you want to find a stock that has been, in the past, has been a real performer, Peloton being in that category, and now it's not doing as well. Those are the kind of stocks you want to look for shorting opportunities. Shorting opportunities. Should we buy bonds? Well, bonds, unfortunately, are a fool's paradise. No, I do not think you should buy bonds. Bonds are not very good in inflation protection. Not a really good place to be. We have Nima bought a SLV. Let's look at SLV at 23.45. Let's look at where that is. I'm going to move over to the chart here and see if we can look at that. We're definitely below that 200-day line, and he bought in at 23.45. So let's see exactly where that would be. Let's look at that, 23.45. So basically, I can see where I can see where you bought. You bought right here. Let's take a look here. This is where you bought. Okay, you bought it. And this is why you should never buy below the 200-day line. This is where you bought, I suspect. My guess is it was back. You bought the stock back basically on November. It looks like about November 7th or 8th is when you bought this stock. That's what it's looking like to me. You bought it as it rallied to the 200-day line, and of course, what happened is it rallied to the 200-day line. It didn't. It hit resistance. Boom, and it bounced down. Now it's rallying to the 40-day line. It's getting resistance and it's coming down. So basically, this as a potential will probably move lower. This is silver. This is the silver. So you think why? You think, well, with all this inflation out there, gold and silver should be doing good. You would think that would be the case, but it is not the case. Silver is not performing, at least not currently, very, very well. And the problem with the silver, and what a lot of people on CNBC and all these places will never tell you, because of course they make money selling silver, I don't sell any of it, is that silver is a unique of the precious metals in that everybody says, well, you should buy silver, it's so cheap, it's so much less than gold is relatively. But here's the problem with silver. When silver prices go up, silver comes out of the woodworks. People have stuff that they melt down. They have, dinnerware sets. They have everything. So the amount of silver in the world is under recognized. There's more silver than you think there is, and so this holds silver down. Anytime silver moves up to about the $25 or so range, it gets whacked. Let me kind of show you this on a monthly basis. And this kind of shows you with the iShares Trust. This is going back all the way back here to the 2008 timeframe. The highest that this has ever been is basically right here. Let's kind of look at it. The highest this has ever been basically is about 46. Now it's at half of that currently. And as you can see, really since about 2010, this has been trending down. Now, it has sort of had a dead cat bounce here, but here's the thing. Here's the problem with this ETF. It has a relative strength line that's pointing down. I would not buy this one. This just is not a good thing. I know that everybody loves silver. Everyone's going to tell you silver gold is the best thing for inflation, but I guarantee you it's not. There are far better things out there. Let's look at something that is likely to be more interesting, at least in the short term. And of course, that is the Spider Select for Energy XLE. I'll show you this one. This is going to perform better as an inflation hedge than silver is. Silver is not going to be. There you go. Okay, we basically, this one has been moving up since March of 2000. As you can see, we've had a nice movement. This is one you might want to consider. Energy Select Spider. This is a sector fund, and we're right at a buy point right now. So let's look at the daily chart to see. If you're interested in an inflation hedge, and I suspect you might be, with a question on, with a question on a silver play like that, you might be interested in an inflation pledge. This, I believe, is a better one. It is the Energy Select Spider. This is a better one, and it's pulled right above the buy point being at 59.41. So this one you might want to look at as an inflation. If we're going to see inflation in the market, this is a good way to play it. You don't have to find with this. You don't have to find individual. You don't have to find individual stocks. You could just buy the sector fund. Now I'm putting the reversal line on here. And the reason I'm doing that, of course, is to show you this was in a slight downtrend off this cup. This is a cup with handle. And then it basically 1, 2, 3 days ago on Monday, this moved higher. So this might be a very good place to park some money. XLE, and it is the Spider Select Energy. And energy right now is doing well in this environment where we're worried about some of these inflation problems. All right, let's take one more, and this is the XLF. This is the same idea. This is a Spider Select, but it is for the financial sector. And this is the other one that you definitely want to look at right now, and that is because this is going to be for the financial sector. This is also at a buy point, interestingly enough, just like the XLE, the XLF, which is for the financial. This is the Spider Select Financial. This is also at a buy point. It's just slightly below. It's getting ready. It hasn't punched through the buy point. I would wait until this thing moves above about 40, above about 41 to buy this one, because we're right below the buy point. But if this thing moves above 41, which I do believe it will, this one might be a very, very good alternative. So the two Spider Selects in terms of sectors right now in this volatile market, because remember, it's tough to place any capital in this market, is XLF and XLE. They're doing very, very well right now. Well, thank you everybody so much for taking a look at my little show. I'm on basically about 4 o'clock or so if I can get everything working, which is sometimes an issue for me. I'm on from about 4 till 5. I try to wrap up the show, try to give you, some trading ideas. We do have an excellent trading community. It is our Discord room. You can find out more about that by going to www.Dallas Trading Floor, taking a look there. We also can sign up for the free action trade alerts there. And also we have I put up a very nice Iron Condor trade on Tesla today. So that one might be of interest to you as well. And you can find all that by going to www.Dallas Trading Floor. So until tomorrow, thank you so much, everybody. Thanks for watching. Happy trading. Stay safe.